Are you working harder but feeling poorer? Inflation isn't just rising prices, it's a hidden thief stealing your money's value. Learn how inflation impacts your everyday life and discover simple strategies to protect your hard-earned cash. So, what exactly is inflation? Simply put, it means your money buys less than it used to. Remember when $1 could get you a candy bar and a soda? Those days are mostly gone. That's because the value of $1 has decreased. We say that the purchasing power of the dollar has decreased. Your money can't purchase as much as it previously could. Why does this happen? There are two main reasons. One is called demand-pull inflation. Imagine everyone suddenly wants the newest phone. The demand is high, but the supply might not be able to keep up. Because of this, companies raise prices. The second reason is cost-push inflation. This happens when the cost of making things goes up. For example, if the price of oil increases, it costs more to transport goods, and those costs get passed on to you in the form of higher prices. Another factor is the money supply. When there's more money circulating in the economy, each dollar is worth a little less. It's like diluting juice with water. The more water you add, the less flavorful each cup becomes. How does inflation affect you directly? If you are a young marketing associate saving for a condo, inflation makes it harder to reach your goal because the price of condos increase and the value of your savings erodes. Rising grocery costs, as seen in the situation of a 35-year-old parent, strain the family budget, making it harder to save for the future. If you're a retiree on a fixed income, rising expenses can eat into your savings, making it difficult to maintain your lifestyle. Tech workers, eager to invest, find that inflation can complicate investment choices, making it essential to understand real versus nominal returns. For bakery owners, rising ingredient costs necessitate difficult decisions about pricing and customer retention. These are just a few examples of how different people are affected by inflation. Inflation affects your savings. The money sitting in your savings account loses value over time if the interest rate doesn't keep up with the inflation rate. It impacts your spending. You might have to cut back on non-essential items to afford necessities. It also affects borrowing. Interest rates might rise to combat inflation, making loans more expensive. And inflation significantly impacts investment. You need to make smart choices to ensure your investments outpace inflation and maintain their real value. So what can you do about it? While you can't completely avoid inflation's effects, you can take steps to protect yourself. Consider investing in assets that tend to hold their value during inflationary periods, such as real estate or stocks. Look for savings accounts or investments with interest rates that beat inflation. Create a budget to track your spending and identify areas where you can cut back. Negotiate salary increases to keep pace with the rising cost of living. Understand different investment strategies and how they perform during inflationary periods. Understanding inflation is crucial for making informed financial decisions. It's a complex issue with far-reaching consequences, but by grasping the basics, you can navigate the economic landscape with greater confidence. However, there are many aspects of inflation that we didn't cover in this video. For instance, the impact of government policy on inflation, the role of international trade, and the complexities of deflation deserve further exploration. Additionally, we could delve deeper into specific investment strategies for different risk profiles during inflationary times. If you found this video helpful, please like, share, and subscribe for more easy-to-understand explanations of complex financial topics.